Well, hello everybody. You're watching the Stock Market Brief Show. My name is Michael Silva. This is the show where we navigate the financial markets through the lens of technical and intermarket analysis. Today, we got a lot to discuss, but I'm going to do it in a compact way because, well, my wife needs to go to Target. I have to watch the kid. I just had an electrician come over and yada, yada, yada. Make sure to hit the thumbs up. It's greatly appreciated. Subscribe to the channel if you haven't done so already. Let's get into it. Alrighty, yes, we got a big week up ahead. We had a good week last week. Let's take a look at the 11 sectors that make up the SP500. Energy led the way. Energy has been falling, right? Now we're starting to get a little bit of a bounce these last couple of days. Healthcare, consumer discretionary, and we still have consumer staples up there. It's been kind of just like peeking its little head out here a couple of times on the leaderboard. So we're going to talk about that. If you look at the heat map, you know, it was obviously a pretty blah type of day overall as we're getting into the CPI data. Tesla was up 4.22%. This one just stands out like a big green thumb over here. And I was looking at this, I was like, well, okay, we have a low, a higher low, and we have a pretty clear area of resistance right at about 230. If it breaks out, start to look for a potential gap fill here. Could be a good little setup, but we do have obviously a lot of macro data coming out that could cause a lot of more volatility. And if you just take a look back over here to the left-hand side of our screen in May during this pullback right here, and this is a very similar type bottom. We had this low, we had a higher low, kind of broke through this area of resistance, and we ran. So are we going to do that? Potentially go 240 and maybe even potentially head higher? Well, the bulls would absolutely love that. As far as what's reporting this week in the S&P 100, we have Home Depot, Target, Cisco, and Walmart. Walmart's sitting at around 52-week highs. Cisco is doing whatever. Target was interesting to me because Target's been getting completely hammered. It's almost down there in double digits. But I will call out that we do have matching highs up here. We have a higher low. This right here is an ascending triangle. So if we can't potentially break back above that 50-day, it might give us a little bit more relief up to that 125, 130 area. But otherwise than that, the trend remains down. So just know going into earnings, if we have a bad report, it could break down lower. Now, this is a consumer staple, all right? And consumer staples are typically more defensive. So we'll see really what takes place. I pulled up some of the higher market cap consumer defensive names, consumer staples. You can see Walmart up there, right? We just talked about it, bringing up new 52-week highs. Look at Procter & Gamble, had this a higher low. We started breaking out this little tight consolidation. Look at Coca-Cola over here, KO, right? You have this little flag pattern over here. Looks pretty good. Look at Pepsi. Pepsi is doing the very same thing. Nice consolidation to the side. You have PM, Philip Morris, I believe that is, Mondelez, MDLZ, nice little tight consolidation. The reason why I'm pointing these out is because these tight consolidations, right? Markets move between expansion and contraction. When they contract, the next move is an expansionary move. So potentially watch for some of these consumer staple names to start ripping, right? That could be a possibility. I mean, look at Monster, MNST. This is a drink company, right? It's kind of flagging here after a nice big move. So it could be the flat pull where we move potentially higher. Here's Target, which we already pointed out there. You have STZ, right? It's kind of flagging over here, holding above that prior area of a breakout. KHC is one that I think I pointed out today to my Discord community. You have a nice flagpole, big pull right here on some nice volume, and it's kind of consolidating sideways. Looks like it can potentially move up higher. Look at KMB, also a very tight consolidation. KDP, right? A nice tight consolidation here too as well. So there's a lot of consumer staple names that are actually looking like they're set up for a move. Whether that's to the upside or downside, I don't know, but the consolidation is very tight, and that could be very, very rewarding if you catch it on the right side. And if you catch it on the wrong side, guess what? Because it's contracting, you have a tight risk management area, the well-defined area that can manage the trade. Now, coming into tomorrow, an hour before the market opens up, we do have inflation data coming out, core inflation. Now, I wanted to call out a couple of things here. 1 year, according to the Fed, the New York Fed, inflation expectations, so 1 year ahead expectations dropped down to 3.6, and even the 5-year down to 2.7. And this is kind of interesting. If you want to know how this is calculated, just download the chart deck. I have it on all my videos. You can download the chart deck. You can read this and see how it's calculated. But I do find that interesting because United States Michigan consumer 1 year inflation expectations, that actually upticked to 4.4. So we saw an increase here. And if you want to read about this, you can read about it down here. And this is also like, if you look at their consumer sentiment that came out, this was last Friday. I mean, plummeting, boom, right? It's down to 60.4. This was well below consensus, talking about how the consumer is really doing. You can read about it more here. Like I said, if you want to download the chart deck, I had to keep this video pretty compact. The reason why I'm pointing this out is because I did see an interesting chart, not a chart, a point out from Parker Ross over here. And he pointed out that back in June of 2022, Jerome Powell did mention a few things about inflation expectations and while it's important. So he pointed out here on the FOMC report back then was participants observed, Fed officials, that some measures of inflation expectations had moved up recently, including staff index or common inflation expectations and the expectation of inflation over the next 5 to 10 years provided in the Michigan survey. And I just find that interesting because he's calling it out to be important. Well, Michigan consumer sentiment actually uptick while we're seeing inflation expectations from the Fed dropping. He also pointed out that Nick Timros from the Wall Street Journal asked him the questions, what changed was really the inflation data, the inflation expectations. But I'm wondering, on the inflation expectations data, was there something you saw that was unsettling enough to risk eroding the credibility of your verbal guidance by doing something so different from what you had socialized before? And remember, this is back when he raised a 75 basis points, right? The Treasury 75 in June 2022. His response was, so the preliminary Michigan survey, right? It's a preliminary reading. It might be revised. Nonetheless, it was quite eye-catching, and we noticed that. So the Fed right here is admitting that they do pay attention to this. So it is going to be important to watch to see Fed expectations for rate hikes, especially how the market's going to be responding to the next CPI data report. Now, this is something that we need to take seriously, he said, and that is one of the factors, as I mentioned, one of the factors in our deciding to move ahead with the 75 basis points today was what we saw in inflation expectations. So that was one of the deciding factors, right? And we're just seeing right now Michigan consumer sentiment upticking, right? And then also inflation expectations from the New York Fed actually dropping. So the reason why I'm calling this out is because you really want to pay close attention to how it comes in, right? So consensus for, say, inflation rate year over year, it's coming in at consensus is 3.3. So are we going to be getting above that? Are we going to come in at? Or are we going to come below, which could potentially set the trajectory of a big move in tomorrow's market? So you really want to wait, see how it comes out, see how the market digests it, and then we could play some levels from that point. It's a very binary event leading into this stuff. And this is obviously an event that can really move the bond market, right? So if we take a look at 10-year yields, it's still holding up. It was up slightly today. It's kind of holding on this lower trend line. So either it's going to break down, we'll see, right? That can change inflation expectations or the rate hike expectations, I should say, from the Federal Reserve. So you can see the dollar will be another one. The dollar is, slight subtle pullback, kind of up a little bit in the after-hour session. Could be very well flagging, but it hasn't really came off all too much. And we know that there's a negative correlation. If this starts breaking out, it could lead the SP 500 further to the downside. The BP SPX chart, so we'll get into some technical charts here, is moving into and around the overbought area. I like to call out when it's oversold and when it's overbought. Overbought can stay overbought for a while. Oversold can stay oversold. But we look for these divergences, how you have a higher low here, a lower low there, and we called out that when? Well, we called it out when it got over here, and we called it out multiple times, and this led to a pretty nice rally. Same thing with the bullish percent index for the technology sector, BPINFO. It's moving into that overbought territory, 69.48, but it's not quite there yet. We talked about it when it was oversold, and we talked about it over here, putting in a positive divergence. What happened? Well, we led to a nice rally. We also have the equal weight kind of flagging right here. Honestly, so this is it's not following the overall index, which tells me, this is the SPX down here, this is equal weight, tells me that the Magnificent Seven, right, the big names, the large market cap names, the $1, the big squares right here are leading the way in the markets while the rest of the market is kind of just consolidating. You could see that in some of the consumer staple names that we just pointed out, how they're just kind of consolidating. Well, we're seeing that across a lot of names. Well, this isn't necessarily a bearish looking chart. Yeah, the trend's down, it's below the 50-day moving average, but really we had a nice move up. And we're kind of flagging here, which could be a very positive sign. And if you look at this from an area of resistance right around that 5,800 for SPXEW, could be a potential inverse head and shoulders that could very well head us higher. Okay, so this is something to obviously pay attention to. You can look at XVG, the value line geometric index. This is a pretty similar thing, right? Equal weight. As the market's pressing up higher, what's this doing? Is pulling back, kind of flagging over here. Okay, so is this telling us that this market might eventually pull back? But it might not have some opportunity if we have a little bull flag breakout. And we've talked about these divergences multiple times when we have lower highs, but yet the SP 500 puts in higher highs. It gives us indication that the market, may very well make a turn. If I take a look at something like IWM, so small caps, right? We went on this big, nice relief rally, and it's been pulling back here. And this, could be a potential setup here too as well. We're below the month-to-date anchored VWAP, so I'd like to see that recouped to make it a little bit more bullish. But as you can see, we pulled into the golden zone. The golden zone I'm referencing is the Fibonacci retracement from this swing low to this swing high. You have the 50% retracement right here to 61.8. This zone in here is known as the golden zone. So if as long as it can hold up in this kind of area, even this gap fill, it at least opens the door to potentially move higher, which people would then be calling that inverse head and shoulders. This could very well be flagging. If we start breaking above it, could open the door to that 175. So that can be a potential bullish setup there in small caps. If you look at it, something like the 15-minute time frame on IWM, it is below a declining 5-day moving average, and I always like to wait for this to flatten out to turn up. So even if it breaks out, I'm like, woo, wait for a pullback, right? And then wait for consolidation to see it do something like that. Or, who knows in this market, we can just see something rip. But it is always beneficial to wait to see us have some, as you can see, I'll just point out right here, right? We're declining, acts as resistance, we got above it, act as support. What's the 5-day moving average doing? It's turning around, offers up a little bit better, it goes into more of a neutral trend. And what happened? Boom, boom, boom. We started ripping up higher. And now we're currently below it as it stands. I can look at something like Qs. This is the 2023 high, right? It ended resistance. We broke out. Right now we have an inside trading day. So this doesn't look all too bad. But if we do start pulling back, take a look where the month-to-date anchored VWAP is, and it's kind of in confluence here with this recent breakout area. So if price does pull back, start to pay attention to the month-to-date anchored VWAP. That's the anchored VWAP for November. That could potentially act as a level of support. Other than that, if we start breaking out higher, that can potentially try to take out that prior 2023 high for the Qs. If you look at the SPY is telling a little bit different of a story. We're bumping our head on this area of resistance. We have a high, that's the 2023 high, and a current high, right? So these are all lower highs as it stands. On a good note, we did break past this high. So as it stands right now, we have, right, a low, a lower low, a lower low. We have a high, a lower high, a lower high, a lower high, and now we're getting a higher high, which is positive. Now, even on a pullback, even if it was down to 420, right? Even something crazy, as long as we hold above this low and this starts bouncing up, that would still put in a higher low, a higher high, and then we'd have to start coming for these areas. So if we start breaking out from here, moving around, start paying attention to this 450 potential area, right? This could be an area of resistance. We'll talk more about that level on the SPX chart, how it's a gamma exposure level that I'm paying attention to on the SPX, so different product. Okay, if we take a look at the 15-minute time frame, we're above the inclining 5-day moving average. We're above the week-to-date anchored VWAP. The week-to-date started today. Down over here is the month-to-date anchored VWAP. So even if we pull all the way back, right, the month-to-date could be coming up. Look for that as a potential area. That's right in confluence with what? The lower weekly expected move. Going into tomorrow's trading session, right? If inflation comes in as expected or not much of a move, we have our daily expected moves right here. 443 to the upside, 436 to the downside, which is right down and around that 5-day moving average. There is a subtle negative divergence still in the works here with the SP 500, so be aware of that. I will note, if we look at the SPX, you have your gamma level right over here. Gamma flip level is at 4370. So guess what? last video, we talked about, hey, look for a potential bounce up, right? After this move, we can potentially bounce up, but then pay attention to what it does when it retests the 5-day moving average. Well, bounce up to where? The 5-day moving average. What happened? Did it pull back down, create a lower high? It didn't. It actually created a higher high. We went higher. We back tested again the 5-day moving average, and then we ripped throughout the rest of the day. So a very, very strong move. We got past that call wall at 4,400. Now, the main call wall to pay attention to is going to be 4,450. So if price starts pumping up higher, that's right in confluence with the daily expected move at 44.85. Okay, so we'll just call it 44.45, right around 44.50 for the SPX. That could be our potential area of resistance to watch going into tomorrow, but that is the larger area. Remember, as price moves up closer and we're in a positive gamma territory, price pushes typically away, but then we look for dealers to buy into selling and sell into strength, okay, which typically looks like this. We had this move down, positive gamma territory. We had buyers come in, push price down. Buyers come in, push price down, kind of pins the price right there. Now, local support is at 4,400. Okay, that's a gamma exposure level. And then we have 44.25 is our local resistance for gamma exposure. And then we have our weekly expected moves. Once again, if you want these levels more in detail, obviously just download the chart deck overall. I want to close off looking at the old full indicator. The old full indicator is still on a sell signal, but it's getting very close to potentially flipping over to a buy signal. So the Nasdaq Composite would have to get back above that 1380, maybe see this start flipping back over, and that could be a positive sign as price is, I mean, it's looking healthy, right? We have a series of lower highs, lower lows, but we're starting to change that narrative right here. So as long as we, pullback as of right now would be fine, but it has to hold, obviously, this level, this main low right over here. That's all I got for you on today's episode, everybody. I'll talk to you guys on the next episode. See ya.